All right, good afternoon, everyone. Thank you for attending. I'm Mickey Doyle, Special Events Manager with the Greater Green Bay Chamber. Today's webinar is closed to the media, and we are available for interviews after the call if you'd like. If you are part of the media, please jump off at this time. Thank you so much. If we could ask that you keep yourself on mute at this time. If you have a question for the presenter, please type it in the chat box, and we will get to them at the end. There's new information every day. I swear every day there's new information about the SBA loans, and we have a top expert on SBA loans in Wisconsin on this webinar. So it is my great pleasure to introduce Tammy. Oh, I knew I was not going to remember how to say your last name. I'm sorry.
It's Clendenning.
Clendenning with SBA Wisconsin. Sorry about that.
No problem. All right, well, thank you. Thanks, Mickey. I appreciate the opportunity to come back. And I will first of all apologize to any of you that were on the line last week. We had technical difficulties, and for the past 2 months, I've been doing anywhere from 2 to 4 webinars a day. And that was my first technical difficulty. So I do apologize. Mickey did her very best to continue to try calling me. But of course, when I'm on webinars, I ignore all phone calls. So I apologize. And so I'll go through some of the early stuff quickly, just because if you were on the line last week, I'm not quite sure where it cut off. So we'll go through that. But again, my name is Tammy Clendenning. I am the lead economic development specialist for the Wisconsin district of the SBA. There are districts all across the country. There's 68 in total. Here in Wisconsin, we do have district offices in both Green Bay and Madison, although we do cover the entire state of Wisconsin. The SBA, as you know, is the go-to federal agency for small businesses. We've been supporting small businesses for more than 65 years and will continue to do so. Again, today what we'll discuss is some of the disaster programming that is available right now to help in this difficult time, as well as other programming that is available throughout the year as well. I will provide this PowerPoint to Mickey. There has been a couple of updates since the one I sent to her last week. So I will provide this to her. There's a lot of technical information on the PowerPoint, so oftentimes they are a nice reference after the fact. Again, we will save time at the end for questions, so do feel free to put those in the chat box and we'll address those. So again, what we're going to talk about today is the Paycheck Protection Program, and there is money available, which we're very excited about. The Economic Injury Disaster Loan, as well as the Advance, the SBA Express Bridge Loan, as well as debt relief that is available through the SBA. And before we begin with actually talking about those programs, we'll talk a little bit about some of the statistics so far. So the Economic Injury Disaster Loan portal, as well as the Advance portal, are kind of open right now. So the portal did reopen yesterday. However, it is only open for those ag businesses to submit applications, as well as any business that submitted an application prior to March 30th, which is when the new Streamlined portal was activated. The portal that now takes about 15 or 20 minutes. So there were some businesses that had applied through the upload portal that was available before that. And if that business did not go back in and resubmit their information with the new Streamlined portal, they can do that. So again, the portal is open right now for ag businesses and those that need to resubmit information that was submitted prior to March 30th. And keep in mind that if you did submit an application before March 30th, and that was the uploading portal, your application does continue in queue. You will not lose your place. What they'll do is they'll marry the application that's done through the Streamlined portal with your uploaded information, and you will continue to go through in queue and not lose your place. Again, the Paycheck Protection Program did open last Monday, the 27th, and continue to take applications, so we're excited for that. For the second round of funding, we actually just got some updated numbers that I'll provide you today. So as of May 1st, there have been 2.2 million loans done across the country, representing about $175 billion. meaning we do have about $145 billion that we still have available for those small businesses that need access to those funds. So far in this second round of funding, there has been about 5,432 lenders that has submitted applications, which is great information. The average loan amount is about $79,000, which is really great considering that the first round was about $206,000 as the average. So clearly the dollars are getting to the hands of those smaller businesses that really need that. Again, the vast majority of the applications that have been submitted have been done by the small lenders. There really has been a focus on the small lenders this round because oftentimes the bigger banks have larger customers. Some of the smaller community banks and credit unions and intermediaries work with some of the micro borrowers and those small businesses that are either in rural communities and whatnot. So there's been a big focus on that for the SBA. We early on realized that there was robotic submissions being done by some of the larger lenders. So the SBA did limit those robotic submissions, which is kind of that mass submission, if you will, that kind of taxes the system and doesn't allow some of those smaller lenders in. So they did remove that. In addition, there has been processing time through E-Tran or through the SBA portal for approvals focused just on small lenders. So some real important steps there. Here in Wisconsin, the second round of funding, we have seen 29,947 loans done for $1.67 billion. So again, Wisconsin is receiving funding through the PPP program. Just some real quick stats on the first round of funding. So the second round of funding obviously is $310 billion, of which a minimum of $60 billion was carved out just for smaller lenders. In the first round of funding, there was 1.6 million loans done, representing that $349 billion. And if you caught that number there, so in the entire first round of funding for $349 billion, there was 1.6 million loans done versus so far at $175 billion, 2.2 loans. So obviously there's been a significantly larger quantity of loans being done. The initial round of funding did have about 5,000 lenders. The majority of those loans were done for under $150,000. So again, the smaller borrowers were receiving funding despite the fact that there are some media attention to some of the larger organizations, the Lakers, the Ruth Chris, some of those others. That was not really representative of where the vast majority of the money went, but obviously, there was a big media attention for that. Our administrator did announce that as of April 27th, more than $2 billion of first round funding had been returned. So either it had been declined or returned by the borrower that received that. Those funds are now available during this current round of funding. So there is additional money to that $310 billion. Again, the first round of funding, Wisconsin did receive about 43,000 loans at $8.3 billion. And keep in mind that there are non-bank lenders that are now approved also to do PPP funding, and those include PayPal, Intuit, Square, On Deck, Blue Vine, Funding Circle, Cabbage. So if you can't find a local lender that can process your PPP loan, we do encourage you to reach out to one of those lenders as well. Keep in mind there are over 600 lenders throughout Wisconsin that are processing PPP loans, and we do have a link to that at our website. Another big topic of interest is the economic injury disaster loan. We don't have any recent status or stats for that, but as of April 24th, here in Wisconsin, there were about 14,000 advances that had been given out, representing about $63 million, and about 339 loans at $71 million. So again, I receive calls and emails every single day from people who have applied for the economic injury disaster loan, looking to see what's the status. And unfortunately, Here at the district level, we don't have access to the system for the Office of Disaster Assistance, or as we call them, the disaster folks. So we can't really provide any updates, but I do know they are focusing on processing those applications, not necessarily providing updates. So they are processing, and one thing that we want to address too is there were a couple of articles that were out a couple of weeks ago that did say that the economic injury disaster loan was either being limited at 15 or 25,000. There was two different media articles, and we are not finding that to be true at all. So that's why you can't always count on everything you see in the media. We have definitely been aware of businesses receiving much larger loans to the tune of 500,000, 168,000, $50,000 ranges. So it really just all depends. So that's some of the statistical information so far. Now we'll move into what the programs are and who qualifies. So for the Paycheck Protection Program, this is a loan that incentivizes small businesses to keep their workers on the payroll. And it really is a benefit to both the employee as well as the employer. So from the employee's standpoint, obviously, as we all know, the unemployment systems have been taxed greatly with the significant amount of people applying for unemployment. So the whole hope here is to keep workers off of unemployment and on the employer's payroll. So that is a direct benefit of this legislation. In addition, it is a direct benefit for the business as well, because obviously your existing employees, they know your business, they know your systems, they know your processes, they know your customers. And so as the state continues to open up and more businesses are able to open at whatever level we are able to open at, you have those employees that can help you to just continue right on with business instead of having to train new people or to bring on new workers. So again, it does behoove the business to keep those same workers if at all possible. Again, we do encourage you to apply early because it is a first come, first served basis. We don't know how long this round of funding will last. As you all know, the first round of funding did only last about 2 weeks. We anticipate this one will last a little bit longer, but don't expect that it will last the entire application period, which does go through the end of June. Again, there's $310 billion. Small lenders are representing a huge portion of that. And assuming that loan proceeds are used for qualified expenses, there is forgiveness available up to 100%, and that would include both the principal and interest. We do encourage you to track and document the expenditures to allow for forgiveness, as if there is failure to document, forgiveness may be limited. And I will let you know that we are still waiting for some of the guidance to come out on the forgiveness portion. So there's a lot of very technical questions that we get asked every day that we just don't really have answers to yet. But we'll talk in generality about what the forgiveness looks like. So who's eligible for a PPP? Pretty much if a business was in business as of February 15th of this year, for the most part, you would be eligible. Again, it's for businesses with employees count under 500. However, there are some NAICS codes that do allow for greater than 500. It is for tax-exempt nonprofits or 501c3s, for veterans organizations, tribal concerns with fewer than 500 employees, sole proprietors, independent contractors, and self-employed, as well as faith-based organizations. Now, SBA affiliation rules do come into play for the Paycheck Protection Program. However, there were a couple of exceptions made. So what is the affiliation rule? Well, the affiliation rule looks at businesses that have either common ownership or common management or control, and groups those together for purposes of determining whether that business or that group of businesses has under 500 employees. A couple exceptions that were made were for NAICS codes that begin with a 72, and then also for individual franchise locations. Obviously, the purpose of the Paycheck Protection Program is to allow for funding for payroll, interest on mortgages, rent, and utilities. And assuming that at least 75% or more is used for payroll purposes, forgiveness is expected. And we'll talk a little bit more about that. So regardless of what lender you would work with, all the Paycheck Protection programs will look exactly the same. So whether that's a large bank, a small bank, a credit union, one of the non-bank lenders, all PPP programs will look the same. There's a maximum loan amount of $10 million. The term is 2 years with a 1% interest rate. Loan payments are deferred for 6 months, however, interest will accrue. And the calculation for the maximum loan amount is 2.5 times the average monthly payroll. Again, we'll chat a little bit more about that in a second. There is documentation that will be required, obviously including the payroll information that helps determine what your monthly payroll is. Other information may be required by the lender that you work with, especially if it's a lender that maybe you don't have an existing relationship with. For compliance purposes, they will need some other information from you. Some of the documentation is listed here. One thing that I will alert you to is last week on our website, we did come up with a new document, and it's labeled How to Calculate Maximum Loan Amounts by Business Type. You can access that on our website, and what that does is it breaks down the particular type of organization that you are. So whether you're a sole proprietor, if you're a C Corp, an S Corp, a partnership, whatever your business entity type is, it tells you exactly how to calculate what your maximum loan amount is, what can be included, and what documentation will be necessary. So that's an important document. You can find it at our website or Treasury's. Again, there are no fees associated with a PPP. No collateral is required, and no personal guarantees are required. With the Paycheck Protection Program, you do apply directly through a lender. So again, one of those local community banks, credit unions, or the non-bank lenders. We also do know that there are some local CDFIs that are processing loan applications for PPP as well. There are several of them. I believe FACC is. I know that WIBIC, as of tomorrow, will be opening their portal to process non-client PPP programs as well. So again, you can check our website for an alphabetical listing of those Wisconsin lenders that are processing PPP. You can also see a sample copy of the application form on our website that'll tell you the information that is required as well as the certifications that must be made. But keep in mind that most lenders are using their existing portals for that. So each lender may ask for a little bit of different information depending on what their requirements are in compliance and whatnot. So to determine your maximum loan amount for a Paycheck Protection Program, again, it is based on 2.5 times the average monthly payroll costs. There are a couple of different ways to determine your average monthly payroll costs. So business can either use the 12 calendar months of 2019, or perhaps if you're a seasonal business, there's a couple of different calculations, including one that just came out last week. A seasonal business can either use the period of February 15th or March 1st through June 30th of last year, or any 12-week period between May 15th and September 30th. So again, just depending on your specific business and what your seasonality looks like, one may be a better approximation than the other. And if a business was not around in 2019, they can also use the period of January 1st of 2020 through February 29th of 2020. Payroll costs are limited to the first $100,000 in cash compensation for any employee or owner, and that does not include non-cash benefits. So if you have an employee that is earning greater than $100,000, that's all fine and good. However, for the purposes of calculating your Paycheck Protection Program, for the calculations, that amount must be reduced down to $100,000. Non-cash benefits are also included as part of payroll costs for purposes of the PPP program. And those non-cash benefits include employer contributions to defined benefit or defined contribution retirement plans, payment for employee benefits, for group healthcare or dental coverage, including the premiums, and the payment of state and local taxes assessed on compensation of state and local taxes. So again, we do believe that unemployment compensation is also included in there, or your premiums for unemployment. Now, I did add this slide to this. This is a screenshot taken directly from the interim final rule with the rules for the Paycheck Protection Program. One of the questions that we receive quite frequently is, can I have an economic injury disaster loan and a PPP loan, and how does that work? Well, if your economic injury disaster loan was used for payroll purposes, then that must be paid off with a Paycheck Protection Program loan. If it was used for other purposes, so say for example, maybe inventory or other fixed debts that a business might have, then you don't need to worry about getting that paid off with your Paycheck Protection Program. However, and again, you can have both, you just can't use the same use of funds for each. So if, for example, you have an EIDL along with the advance, when calculating the Paycheck Protection Program, you would pay that off with the Paycheck Protection. So let's say, for example, a business was approved for a $50,000 economic injury disaster loan, and they were able to receive, or they did receive, the full advance of $10,000. That business is only responsible to pay back that $40,000. And so if they've used that again for the same purposes that the PPP is going to be used, they would take that difference of $40,000 and that must be paid off with the Paycheck Protection Program. And as long as I'm on this slide, I will tell you there are several documents that kind of the guidance for the Paycheck Protection Program. There are several interim final rules. The first interim final rule is either 31 or 41 pages. That kind of lays out the program. There have been a couple of other interim final rules that have been added as well for very specific purposes. So a couple of examples are on affiliation, some are on how the lender processes, some are on how CDFIs work. There's also a frequently asked questions document that really puts a little bit more definition on some of the information in the interim final rules. You can find those on our website or on the website of Treasury if you have any specific questions. Again, back to the forgiveness, assuming that at least 75% of the loan proceeds have been used for payroll purposes, then the business can submit for forgiveness. That application for forgiveness will be done directly with the lender. Again, the lender will process that. And the loan proceeds must be used for the expenses listed during the 8-week period commencing with the disbursement of the loan. So again, that time clock does start ticking on that 8 weeks when the loan is dispersed. And we receive a lot of questions on, well, we aren't going to have our employees back by then. Can we change that 8 weeks? And at this point, there is no expectation that that 8-week period will be different than the 8 weeks following the disbursement of the loan. Again, keeping in mind the spirit of the law is really to keep employees on the payroll. So that is how it's designed to work. And again, the loan proceeds can be used for payroll costs, rent, mortgage interest, and utilities. So forgiveness may be reduced if employee headcount is reduced or if there is a reduction in salary. Again, keeping in mind that if an employee makes greater than $100,000 for the PPP, it must be reduced down to $100,000 for the calculations. And if there is a headcount reduction that occurs between February 15th and April 26th, as long as all those employees are brought back on by June 30th, full forgiveness is still available. These are some documents here again. When Mickey does share this PowerPoint with you, these are links that take you to our website for some of those documents that I referenced. So the FAQs, determining, this is a nice one here, determining your maximum loan amount and what documents are required, finding a lender, and whatnot. So now we'll talk about the economic injury disaster loan. The economic injury disaster loan does work a little bit differently than the Paycheck Protection Program, as well as our traditional lending programs. So the PPP and our traditional lending programs are done with local lenders. However, the economic injury disaster loan is a direct loan with the SBA. The disaster loan programs have actually been available through the SBA for quite some time, but just never used in the significant manner that they are being used right now. So typically, the disaster loans are used on a much more localized basis. So for example, in Wisconsin here, if we've had a tornado or perhaps the flooding that we've seen the last couple of years, certain counties that are affected by disasters will be declared disaster areas and then have the disaster programs available to them. So maybe it's on a 5 or a 7 or a 9 county area, depending on where that disaster is. Never before has there been a disaster declaration that it's included the entire country, all 50 states, and never has a disaster declaration been done for a pandemic or a virus. So again, this loan program is just blowing up. There's a ton of interest and a ton of applications for this. Again, it is a working capital loan that is designed to pay fixed debts, payroll, accounts payable, and other bills that could have been made had the disaster not occurred. So it does allow a little bit more flexibility than the Paycheck Protection Program, but it is also a loan product that is not necessarily forgivable. Applications do go directly to the SBA, so you can apply either at disasterloan.sba.gov or sba.gov/disaster. You'll see at the top of the website, once you get there, coronavirus information, and then you would click through to find that application portal. It is a very streamlined portal right now. It looks for basic information on the business, the ownership, the number of employees, the annual revenue, cost of goods sold. I think that's about it. And then there's also some certifications that will be required as well. So the application in total will take you maybe 15 or 20 minutes. It's very, very streamlined and simplified. There is no cost to apply, so we do encourage you, when that application becomes the application portal is opened again for all businesses. If you think that this is something that you would need, we would definitely encourage you to apply for that. We do expect that it'll open on a larger basis, as I mentioned before. Right now, it's only open to those ag businesses as well as businesses that had applied under the original application portal and needed to resubmit now. In terms of loan approval criteria, applicants must have a credit history that's acceptable to the SBA, as well as the ability to repay the loan. In terms of the loan information, the interest rates for a disaster loan right now are 3.75% and 2.75% for nonprofit organizations. That is a fixed interest rate, and there is no repayment penalty. So a business may repay this at any time. The terms are up to 30 years for repayment. What I've heard from most businesses is that they've either received a 15 or a 30-year term. And again, I'll go back to the nonprofits. So this program is available for private nonprofits, and because it is not open to municipalities or governmental bodies. So definitely something to note there. Again, eligibility is based on a size standard. So a business must qualify as an SBA small business by size standards. And you can check your NAICS code on our website, sba.gov/size. But I will note that I think the vast majority of those on the line would qualify as small businesses, considering that it's either 96 or 98% of the businesses throughout the country do qualify as small for purposes of SBA programming. In addition, on the economic injury disaster loan, there is a 12-month payment deferral on all new economic injury disaster loans. Interest will accrue, but again, no payments are due, and that is automatically built into the EIDL. So as a part of the EIDL, we also have the EIDL Advance. This was part of the CARES Act. It's kind of the grant portion, if you will. A business is eligible for up to $10,000. That is $1,000 per employee, up to $10,000. There is no requirement to pay any advance amount that a business receives. So that is kind of, again, that grant portion. So a business is not required to take the loan portion of the economic injury disaster loan in order to qualify for the advance. And if a business is denied for a disaster loan, they are still eligible for the advance amount. So again, one question that I received quite a bit, especially in the last week or two, is we received the advance, it was in our account, does that mean we didn't get the loan? No, that is not what that means. What happens is the advance part of the web portal is kind of the automatic part, if you will. So the system automatically generates the advance based on the amount of employees. Your loan then does continue to process and go through the queue for the loan part. So you should be hearing in the next week or two if you've been approved for a loan and what amount is approved for a loan. The application process for the advance is part of the economic injury disaster loan process. So that portal that I described before, it is the same for both the loan part and for the advance part. There is a simple checkbox that you would mark that asks if you'd like to be considered for the advance. You would obviously check that. You then provide your banking information, and that advance is automatically deposited into your account. You can use the economic injury disaster loan as well as the advance for payroll costs, salaries, sick leave, rent or mortgage, material costs, pre-existing debt, inventory, really any of those working capital needs that a business would have that they would have been able to pay had the disaster not occurred. And again, similar to the loan part of it for the advance, it's for any small business with under 500 employees. Agricultural enterprises are now eligible for the economic injury disaster loan. They had not been in the past, but the change in the new funding package that was put through did open that up to ag enterprises. So if you are an ag enterprise or if you work with ag enterprises, please do let them know that the portal is open to them right now, as well as faith-based organizations as well. These next couple slides here do just show you what the application portal looked like. It's just a couple of screenshots here, but basically a business, when they are applying for the EIDL, you would just check which entity pertains to you. Again, the vast majority are a business with not more than 500 employees, but perhaps you fall under some of the others. These are certifications that need to be made by anyone who's applying for the EIDL. This was the letter that had gone out to applicants that had applied before the new Streamlined application portal, just letting them know that they needed to apply under the new Streamlined application portal. Again, as I mentioned before, if you did apply prior to the Streamlined portal, where the old system did require the upload of information, you do not lose your place in line. You do continue going through the process, but we do ask that you do submit under the new application portal as well. Then as I mentioned before, the advanced part of it is kind of the automatic part of the system. The loan application part of it does continue to go through the ODA people, or our disaster folks do continue to process those loan applications. They did have greater than 5 million applications, and they do process those at a rate of about 200,000 a day. So they are getting through those. They do continue to process those. What happens is, as your application comes up in queue, you will get an email from the system that asks you to set up your portal. This portal will be how you connect with your loan officer or your case manager through ODA. Any additional documentation that may be required will be uploaded through this system. You'll also be able to check your loan status through your system. But again, until you're assigned a loan officer or a case manager, you'll just be waiting, and then you'll get this email that asks you to set this up. Again, as I mentioned before, a business may have an economic injury disaster loan and a PPP, but those cannot be used for the same purposes. If they are, then an EIDL must be paid off with PPP funds. But if they are used for different purposes, a business can have both products. So in terms of debt relief that the SBA is offering, currently the SBA will be paying all loan payments on any 7A, 504, or microloan for any existing loan. Again, that's 6 months worth of principal, interest, and any associated fees. Your lenders are working with the SBA to provide all that information to get that processed. And if a bank or if a lender does receive a payment from a borrower after March 27th, they are to notify that borrower that no payment is required, and then either return that payment to the borrower, or if the borrower chooses, they can have that applied as a principal payment. So again, a borrower can make additional principal payments during this 6 months, but they are not required to do so. In addition, if a borrower takes out a new SBA loan, so again, a 7A, 504, or microloan between now and September 27th, the SBA will also make payments, 6 months worth of payments on those loans as well. So as long as the loan is applied for, closed, and dispersed before September 27th, the SBA will make loan payments on those for 6 months as well. And I'll take just a minute or two to talk about those different loan products and what they're used for. So the 7A program is kind of our general purpose loan program, if you will. There are offshoot programs under that 7A program, including our exporting, our international trade, some of our express products, and others. But that 7A, again, is our general purpose. You can use that for buying a business, starting a business, buying equipment, furniture, fixtures, working capital, buying property. It's really kind of a general purpose loan. Those loans do go up to $5 million, and an example for repayment terms on a working capital 7A loan, typically that has a 10-year repayment period. So again, it's nice to keep those payments low to help fund the growth of a business as you continue. The 504 program is a long-term fixed asset financing tool. It does provide a low interest rate for a long term. The purpose of the 504 program is either to buy a building, to renovate a building, or perhaps to buy larger equipment. Again, the terms can range up to 25 years on that. And the nice part about a 504 loan is that it requires a lower down payment than does traditional financing for a property. Generally speaking, it's about a 10% down payment versus on traditional financing for buying a building or renovating a building and whatnot. They typically will require at least 20% down. So a nice loan tool there. And then the microloan program, that is done through our local intermediaries, and there is a listing of those on our website. The microloan program does go up to $50,000. Typical repayment terms are up to 6 years. Again, kind of a general purpose tool. You can use it to buy equipment, for working capital, for most business needs. But this is a really good tool for maybe some of those small dollar amounts that are needed, or perhaps if you're a business that it's more difficult to get loans through your traditional sources, or if you're a newer business or a growing business, this might be a great tool as well. Again, as I mentioned before, some of the loan specifics depend on the different programs that you're using. And you can find more information on each of these tools on our SBA website, sba.gov. The nice thing about the traditional SBA products is that those can be used for a lot of different purposes, and they can be used for expansion, perhaps consolidation, refinancing, whereas the disaster programs that are out there are not meant for doing any sort of expansion or consolidation. Again, with the traditional loan programs, they do work differently than the PPP program. Personal guarantees will be required on traditional loan programs. If there is collateral available, the lender will take any collateral that is available. although it is important to note that an SBA loan will not be turned down simply for lack of collateral. Again, you can use it for expansion or just about any need that you would have. And again, the traditional loan programs are applied for directly through the lenders versus directly through the SBA. So again, there's a list of lenders on our website. Feel free to reference that. In addition, another product that is available during this time is the SBA Express Bridge Loans. These are a bridge loan that you would work with an existing lender. It is up to $25,000. It is one more of our traditional lending programs. The Express program does have a faster processing time, and this is a loan product that can be used while you're waiting for your economic injury disaster loan to come through. An acceptable use of funds for an economic injury disaster loan is to pay off any bridge loan that was used during this time to pay expenses, or even if you've used a credit card to pay expenses during this difficult time. An acceptable use of funds for an EIDL is paying down credit cards or bridge loans that were used for this time. We do want you to be aware that, as is always the case, there are some bad apples out there. And so we have definitely heard of people trying to take advantage of this difficult time with either scams or fraudulent claims of SBA programs. We want you to use your due diligence during this time. If it doesn't sound right or seem right, definitely let us know. We are checking into all these different reports, and kind of like I tell my kids, use your spidey senses during this time. And if something doesn't look right, definitely let us know. We don't want anyone to be taken advantage of during this time. I would also let you know about other assistance that is available to you now, but it's also available to you at different times throughout the year. We do have resource partners that do work with you on a no-cost basis. They have a whole host of business technical assistance that they can provide. They have experts in many, many different fields, so we would encourage you to reach out to our resource partners. Those do include the SBDC network, or the Small Business Development Centers. They're located at the 4-year campuses throughout the state, as well as a couple of other locations. We have our Women's Business Centers, so WIBIC and Western Wisconsin Women's Business Center. We also have SCORE mentors located throughout the states, as well as our Veterans Business Outreach Center. So again, they are all working remotely, so they're available by phone or email. But I do know that their main lines and their main emails are being manned, and they are distributing those to the various consultants. So again, they work with you on a no-cost basis. They can help you as you're working through the economic injury disaster loan application, or maybe if it's cash flow assistance that a business might need. They have expertise in a lot of different areas. So again, they're available to you during this difficult time, but I also want to let you know they're available at other times of the year as well. So they can help you with growth planning, marketing, just about anything. So feel free to utilize their services. In addition, you can sign up at our website, sba.gov/updates. We do send out regular communication on programming updates. As the forgiveness guidance becomes available, we'll be sending out notice on that. When the full EIDL application portal is open to all businesses again, we will send out an update on that. In addition, we share information on different classes and events that are taking place through our resource partners as well as others. So again, we'd encourage you to sign up for updates at our website to receive information from us. And with that, that ends the content portion of the webinar. So I will turn it back over to Mickey now for any questions that might come up.
There were some questions. I'm actually going to let Amy Wild unmute herself and ask any questions that she has. I know she typed in several. Oh, maybe.
Sorry, I'm not, can you hear me?
Yep.
Okay, so I guess one of my questions, the earlier one was answered because I'm still waiting for my EIDL loan, and I've called about it, and I was concerned because they told me that the numbers that started with a 2 were no longer viable, and so I reapplied about a week after my initial application in March. And it was still March when I applied for the EIDL advance. I still haven't, heard anything, except I did call, and they said that I had to wait for the portal email, and I worry that I've gotten it and I just missed it somehow, even though I'm very, I'm checking my spam, I'm checking other, thoroughly checking my emails, and I haven't received anything. But the interesting thing is, on April 29th, I got a second in review email about that first EIDL application number, because across the top it had the 200 whatever number on it, which I was told that all the applications that started with the 2 were basically deleted from the lady from the SBA when I called the first time about 2.5 weeks ago. So that was kind of that was kind of answered. I know, but I guess I'm concerned because I thought that, I was told that those applications were deleted. And I just wonder, should I apply again? I guess I'm getting, as the weeks go on, this is week 7 of being out of work. I'm just kind of getting a little tense and frustrated. So, yeah, I'm sure I'm not the only one.
So what the Office of Disaster Assistance told us is to expect about 4 to 6 weeks for processing time. So I would expect that you should be hearing very soon. What they have told us is that those initial applications, so that 2 series, if you will.
Yeah.
And I think I heard you say that you did go back onto the Streamlined portal.
I did.
Okay. So then what happens is it marries those 2 together, and you don't lose your place in line from that 2 series application. You continue to go through the queue at that, and it kind of marries those 2 together. It opens up the advanced, it opens up kind of that faster path.
Yeah, well, and I thought
that you should hear.
Yeah, so I guess that's what concerns me too, is because a friend of mine that is a similar situation, she's a sole proprietorship as well. And I told her about the EIDL loan after the fast track one. I'm like, it's way easier than the other one, because the other one took me a couple days to get all the stuff together. And but anyway, I'm like, it's so easy. And so she applied after me, and she already got her advance.
I can't tell you that there's a rhyme or reason for the way these are going through, because
Yes.
ODS told us to continue to process those first come, first served order. But we've heard that from others as well. I applied, and then my brother-in-law applied, and he got his advance first. Can't really say that we understand how it's all being done, but I think that you should certainly soon. You can call the disaster customer service line, but I'll tell you, for the most part, they told us that they're not providing updates on specific applications because they're using all their resources to the applications. But I would certainly think that you should be hearing very soon.
Okay.
I received communication from several businesses in the last day that they received an email over the weekend that said, yes, your loan application is here, process those. No, you're still in the system, but again, I can't give you any idea of exactly when you'll think to, but I would think it would be soon.
Okay, well then that leads me to the other question, with PPP. I know that's strictly for for payroll. So I guess, and I know. So what if you get the PPP first before the EIDL?
Yep. So what I would tell you, as far as the PPP and the EIDL goes, you can have both of them. So you can definitely take advantage of the PPP. There is some component in there for rent, utilities, and mortgage interest, if that's something that you have. So as long as 75% of the funds are used for payroll purposes, then you can still recognize forgiveness. But there is some component in there as well for paying other bills. And keep in mind too that if a business utilizes the money from the Paycheck Protection Program to pay other bills as well, you can certainly do that. You just may not recognize 100% forgiveness on that. So, but again, when you look at it, it's a 2-year loan at 1% interest. the first 6 payments are deferred. So even if a business is not able to recognize 100% forgiveness, it's still pretty darn cheap money, probably some of the cheapest money that a business will find. So just keep that in the back of your mind as well, because I know I've talked to businesses that have said, you know, I can't utilize, you know, at least 75% for payroll purposes, but you know, we can pay this bill or that bill, as long as you're using it for the utilities and the other things. You know, it will just convert over into the loan part and won't receive 100% forgiveness. Make sense?
It's just, yeah, thank you.
Sure.
All right, so Ken W. asked, is there anything in place for businesses that are subcontractor based far away, the forgiveness end of it, one sole owner?
I'm not sure I fully understand the question, but a sole proprietor as well as an independent contractor are eligible to apply for a Paycheck protection program on their own and would not be necessarily part of the calculations for the business that are paying them in terms of the independent contractors. I'm not sure if that answers it. I wasn't quite sure exactly what that question was asking me.
All right, Ken, you are unmuted if you want to ask. Did that answer it, or do you need to ask more? All right, I'm not sure where Ken went, but let me see. How long does a borrower have to accept or decline the EIDL?
Good question. So the economic injury disaster loan, a business does have up to, I think it's 60 days to sign the So once they go through the approval process, they get the approval, then the file goes to legal. Legal then drafts the documents and sends those to the borrower. I believe that the borrower has 60 days to sign those loan papers and get those back. But you do have up to 6 months to decide if you want to accept the EIDL loan.
Okay. And Mary Pot, we have, when do you expect to be able to provide us with specific details on the forgiveness calculations?
It's a really good question. We are expecting that guidance literally anytime. We really kind of thought we would have that last week. We are waiting for that to come down from SBA headquarters as well as Treasury. And keep in mind that both Treasury and SBA work together. So they both have to bless that forgiveness stuff, if you will. So we expect that anytime, but I can't give you an exact date because truthfully, we expected it already.
Okay. That's all the questions that were in the chat box. If you'd like to ask a question, now is the time. Did we get to Jerry's questions? I know he asked them ahead of time. The lump sum or the installments, you weren't sure about that. We talked about that ahead of time.
Yeah, that's a great question. I think Jerry had asked whether for the PPP loan, whether or not the payments to employees or the payroll costs needed to be paid in installments or on a weekly or bi-weekly basis, whatever it is, or if they can be done in a lump sum. We don't have that definition yet, so I don't really have an answer on that yet. We expect that to come out with the forgiveness guidelines. So unfortunately, I don't have an answer for that one.
Okay, I am gonna unmute Brian Hiska, who has a question. He is on the phone. Go ahead, Brian.
Thanks, Mickey. Thanks, Tammy, for joining and for sharing all the great information. I want to clarify one thing that I thought I heard you say, and then I just have one additional question. Okay. I just wanted to confirm that you did share a little bit earlier that if a borrower that has taken PPP funds and they end up not seeking forgiveness for the full amount of the funds, say they borrowed $1 million, but there was only 500,000, let's just say, that was used for payroll, utilities, etc., and there's a remaining $500,000, that those dollars can in fact be kept by the borrower, and those dollars can be used for literally anything: inventory, equipment, working capital, etc.
So what I'll tell you is that the forgiveness, right now you are eligible for up to 100% forgiveness. If at least 75% of those funds are not used for payroll purposes, then you would not recognize forgiveness. So if a business does not receive forgiveness on those, it automatically converts over to the loan component to that. So again, a 2-year loan at 1% with the first 6 months deferred. So again, the way that the program is set up is that it's for payroll costs, mortgage interest, rent, and utilities. But again, it does convert over into a loan product if you don't receive full forgiveness.
So anything over and above the forgiveness that still might be left over, that is, say, an unforgiven portion, that those funds are the borrowers to use as they see fit for their company?
What I'll tell you is that I definitely know there are businesses that are using them for other things. I can't tell you that, how that will exactly fit, but it does, it does convert over into a loan. And again, that's a business decision that each business will have to make, is exactly how they'll do that. You do need to keep track of the way that those funds are being utilized, but until some of the forgiveness guidelines come out, I can't give you carte blanche on something like that, because we just don't know.
Okay.
I do know you won't receive the forgiveness on that part of it. And again, it's a loan then at that point. So
correct. Yep. Correct. Just with your comment earlier about 1% being a pretty cheap money, that's just what sparked my question is all.
Right.
So then my other question is, I understand that there is still clarity that needs to be provided, but in the updated FAQs, we've got a lot of clients and businesses in the community that are confused by the reference to liquidity, basically posing the question, should we be repaying our PPP loans before the 5/7 safe harbor date? Is there any more clarity on what access to liquidity actually means, so that they can be more informed on making their decisions?
I don't know that we have a better definition of what access to liquidity means. So, we don't. So again, when you look at it, you've got some of the large organizations that have the ability to make it through this time without accessing other funds. So perhaps a Lakers organization or Ruth's Chris or Shake Shack. We don't want to shy our local businesses, our small businesses, away from taking advantage of the PPP if they need that. So, what the SBA and Treasury has said is that they will be auditing any loan over $2 million. But again, if it's something that a business needs to get through this time, we don't want to shy them away from taking advantage of that. They have that loan product available if they're affected by this. The other thing to keep in mind too is that, unfortunately to us, is this loan information will become public information as well. So I don't know at some point if there will be a listing of businesses that have taken advantage of this or not, but that is something to be aware of as well. But again, we put it back to, if a business needs this, this is what it is there for. So we know that we've received calls from some of the businesses that have received larger loans because they're larger organizations and they're looking at, possible layoffs, or they've lost jobs because of the whole situation. Well, then obviously there's a business need there. So, I can't advise a business to take it or not take it, but if there's a need there, that's what it's meant for.
Yeah, your second to last comment there is really what we're hearing a great deal of, is that, today as we sit, there isn't necessarily this dire need for the funds, but because of supply chain, they're seeing that there definitely is going to be 20-30% decline in jobs and revenues over the next 4 to 6 months. And if it wasn't for the PPP program, they would have started, back a month ago, they would have started making staffing adjustments in anticipation for those future declines. But, you know, given that it's just this 8-week period, they're really struggling with, I don't need it today, but if I didn't have this, I would have, you know, I would have laid off, or I would have let go of some people because of what we know is happening. So that's the impetus of the question, is, I guess.
Yeah, and we've heard this,
Sure.
you know, so.
Okay. I appreciate your comments. Thank you.
Yeah.
Thank you, Brian. All right, we are past the time, so I just want to thank Tammy for giving us the information. And again, this will be on our website as a recorded event, and she will be sharing out the slideshow, so you will have all the information that she has given. I know you're pretty busy. I know we talked about it earlier. You're doing about 2 to 4 of these a day. I feel like I'm busy doing a few a week, but that's a lot. So thank you so much for presenting this in our community. Very much needed.
Yeah,
The
thank you.
Greater
And
Green
I
Bay,
appreciate the invitation, and, you know, hopefully once we're all allowed to get out and about and into the communities again, I look forward to meeting you all and helping you in other ways as well once we get past all of this.
yeah, that'd be great. Thank you so much. Thank you all for attending, and have a great rest of your day.